It's great to see you, Sam.
Thank you.
Always. So the market is reacting today to the Fed minutes. We learned that they're going to be trimming their balance sheet, $95 billion a month. We know that they're going to be raising interest rates. How do you think the market and the economy are going to be taking all of this?
I don't think I can speak to the market. That operates in its own realm. But I think that shrinking the liquidity factor is a very important thing. I mean, I think the Fed is probably 5 or 6 months behind what they should have been doing. And I think the inflation that we're dealing with, which is, I think, very significant and much higher, frankly, than what the statistics suggest, is all about too much money chasing too few opportunities.
Fiscal, monetary.
Yeah, I mean,
they overdid it.
When you think about, all of the fiscal stimulus, and I think somebody pointed out to me that, the Fed debt level, 4 years ago versus what it is today, the U.S. debt level is just enormously bigger. And that means that the economy was just overrun with money. And so that basically destroys price discovery.
I think the Fed is realizing that this needs to be done. That the question is, how painful is it going to be taking the punch bowl away?
Yeah, well, history says it's not uneventful. And my guess is that we're going to have, depending on the situation. I mean, I think there's a lot of, I'm obviously involved in the REIT area, but in the REIT arena, we've never had as low debt levels as we have today. So I think that, for example, is unlikely to be, significantly impacted. On the other hand, there's a lot of, leveraged businesses that a change in interest rates, particularly over 150 basis points, is going to make a difference.
Are you in the recession camp?
No, I think the economy is, frankly, stronger than conventional wisdom suggests. And but I think that, it's going to be difficult to, you're going to have some difficult times, and particularly difficult companies that are, selling at multiples of sales, not multiples of profits.
So how are you preparing some of the companies? You mentioned the REITs are in pretty good shape, and they have been acting as a safe haven in the market. But how do you prepare the companies that you're dealing with for this big reversal of what we're about to see at the same time that we are seeing these sky-high inflation rates?
There's no substitute for liquidity, and liquidity equals value. And I think more than ever before, that's going to be relevant going forward.
When do you think inflation comes down to normal levels?
When do I think, or when do I hope?
Both.
I think that.
So they're different.
I think that we've got to get inflation under control. We can't afford to have a repeat of the '70s. But I'm worried that between a president who seems to want to sign anything that creates more money, to a Congress that doesn't seem to remember cost-benefit relationships. It might take a lot longer than it should.
Do you think the inflation is on Biden's shoulders from the stimulus bill?
It's hard.
You can also blame the Fed, the supply chain.
It's very hard not to give him a lot of the credit. I mean, I think that he came in. I think he came in a period where the inflation bug was already in place. But that first $1.9 trillion, I mean, remember, we used to talk about raising, taxes or raising money in billions. And from Biden's first day in office, he started talking about trillions. And the economy just can't afford that kind of liquidity.